Hello, good morning, everyone. Well, I hope that everyone is ready for another day of learning, sharing, and networking. We were so fired up by yesterday's sessions and very excited about today's program. First of all, I want to thank our sponsors and partners, CUNA Mutual Group, Citi, Equifax, NCB, Experian, NeighborWorks, Agent IQ, NCUA, and AACUC. I hope you had a chance to watch the fireside conversation between Kathy Mann and Robert Smith. It was just available before the beginning of the conference of this session today. It will be available through our YouTube channels as well, and also on demand if you go back to the conference page. As you know, Robert Smith is the founder and CEO of Vista Equity Partners. He's one of the most successful businessmen and investors in the country, but he's also become a leading voice within philanthropy, impact investing, and the business community at large. Trying to get corporations and government to work on bridging the racial wealth divide. You can find the video on the conference website under the main navigation tab at Robert Smith interview. You can also see the conversation on Inclusiv YouTube channel at Inclusiv CU Network, along with recordings from Congresswoman Maxine Waters, Rodney Hood, and other speakers. The full agenda and speaker bios are available under the respective tabs, agenda and speakers, on the conference site. Please remember that the hashtag for the conference is hashtag CDCUCON 2021. Please follow us on social media and share your comments, opinions, and let's just celebrate how important financial inclusion is for all of us. The recordings of all sessions will be available post-conference on the Inclusiv YouTube channel, Inclusiv CU Network, by October 11th. Please share your comments and questions in the chat and Q&A boxes. The technical assistance email is emsupport@advancednetlabs.org. And the attendees can also ask for help via the support bubble on the bottom right-hand part of the screen. Really quickly, I'm gonna walk you through today's program. We have an amazing lineup of speakers. After this conversation around climate change, and we'll have a breakout session that starts at 11:30. We'll have the CDF5 Fund and you, inclusive mortgage, turn denials into approvals, a lending tech innovation by necessity. Then we'll break for lunch from 12:30 to 1 o'clock. From 1 to 2, we'll start another general session, socially responsible investors, advancing equality. And then we'll go into another series of breakout sessions from 2:15 to 3:15. And in those sessions, we have the inclusive funds, secondary capital and technical assistance, small and MDI credit unions, leverage capital to grow, and measuring member financial well-being. From 3:30 to 4:30, we'll have our final closing session, advocating for low-income communities with Senator Warner. Now, I would like to introduce you to Angela Morrison, who's the recording secretary at the Inclusive Board of Directors and Community Development Manager at Meritus Credit Union in Louisiana, who will introduce NCUA Board Chairman Todd Harper.
Good morning. Thank you so much for the opportunity, Pablo, and welcome everyone to our annual conference. It's such a pleasure to be with everyone today. And I have the opportunity to introduce to you our NCUA chair, And I'm very privileged to be able to do that. But before we do, can I just ask that we take just a moment of silence? The state of Louisiana was hit pretty hard with Hurricane Ida, and then again with the Tropical Storm Nicholas. So if you would take just a moment of silence to remember those that are in recovery. And we also have a moment of silence in memory of our dear colleagues, members, families, and friends. Thank you. I'm so sorry, my internet is unstable this morning. Of course, I'm having difficulty. I'm not as prepared as I should be, and I apologize for that. But our next speaker does not need any introduction at all. He is the chair of our National Credit Union Administration, and I welcome him this morning and for his words of welcome to us. Thank you.
Hello, everyone. It is good to join you. When I became chairman earlier this year, I said that the NCUA must work to advance economic equity and justice. One way we are achieving that goal is through our support of minority depository institutions, or MDIs, which play an essential role in providing safe and affordable financial services to underserved communities, many of which were especially hard hit by the COVID-19 pandemic. This is vital work, and I am fully committed to supporting MDIs by providing them with needed resources like training, grants, technical assistance, loans, and mentoring opportunities. We are increasing the NCUA staff devoted to supporting MDIs, and through the Community Development Revolving Loan Fund, we continue to fund MDI mentoring partnerships. These mentoring grants help to bring MDI credit unions facing challenges together with more experienced credit unions that can provide guidance and technical assistance. And as part of this year's Revolving Loan Fund grant round, the NCUA allocated more than $1 million to low-income designated credit unions for underserved outreach. Through our underserved outreach grants, we are supporting efforts by credit unions to help close the wealth gap in their communities. These grants are facilitating outreach activities to bring affordable financial services to more people and supporting products and services tailored to help underserved households improve their financial security. We announced the awardees earlier this month. The Community Development Revolving Loan Fund grants may often be small in size, but they can make a big difference for small, low-income, and minority credit unions that are working to provide more and better services to their members and communities. That is why I encourage all eligible credit unions to consider applying for these grants in the future. Also important is the participation of MDI credit unions in the NCUA's upcoming MDI preservation roundtables. These online forums will take place in the Southern region on September 28th and the Western region on September 30th. These virtual feedback sessions will provide the NCUA with needed information on the challenges facing MDIs and how we can improve our MDI preservation program. When speaking to groups within the credit union system, I often note that there are 3 ways to close the wealth gap. One way is to open and fund a retirement account. Another way is to start a small business. And the third way is to purchase a home. We know, however, that many people of color have been denied equal access to our housing system. The result of this systemic and institutionalized discrimination is the creation of one of the widest wealth gaps between the races in the history of our country. To close that gap and advance economic equity and justice, we need to take a hard look at the barriers to home ownership that people of color face. One way to close that gap is to examine the issue of appraisal bias. More than a decade ago, in the Dodd-Frank Act, Congress enacted reforms aimed at addressing problems in the appraisal industry, and many consumer organizations and civil rights advocates supported those reforms. Among other things, Congress strengthened the powers of the Federal Financial Institutions Examination Council's Appraisal Subcommittee, which supervises state regulatory programs. Those reforms also sought to address appraisal independence, fairness, and accuracy. Today, however, we continue to see stresses in the appraisal system, including bias based on race, and I am deeply concerned. You too may have also read recent news stories and investigations about this problem. Existing statutes like the Fair Housing Act, the Equal Credit Opportunity Act, and Title 11 of the Financial Institutions Reform, Recovery, and Enforcement Act aim to address this problem, and we should use these laws to regulate, supervise, and enforce against appraisal bias. At the NCUA, we are studying the causes of disparities in appraisals and valuation services to inform our future policymaking. We are also working with several other agencies on joint rules to establish quality control standards for automated valuation models. And within the Federal Financial Institutions Examination Council, we are continuing conversations on what more can we do to ensure greater equity within the financial system. In closing, by enhancing support for MDIs, enforcing fair lending laws, addressing disparities in the appraisal system, and advancing initiatives to close the wealth gap, we can address the inequalities created by centuries of systemic racism that have been exacerbated by the ongoing pandemic. We can also ensure that the credit union system lives up to its mission of meeting the credit and savings needs of consumers, including those of modest means. The result will be a more vibrant economic outcome for everyone and a stronger democracy. I know that these issues are at the heart of what Inclusiv and its members seek to achieve each day. Please stay focused on that work. Thank you, and have a great conference.
Thank you so much, Chairman Harper, for your comment and for your commitment actually to financial inclusion and community development. We're very fortunate to have you at the helm of NCUA at these unprecedented times where CDFIs and MDIs have so rightfully gained relevance both within the industry and at the national level. I also want to thank Angela for helping us pause to reflect on the losses and on the leaders that we have that are no longer with us. We also promise to double down on our efforts to increase access to asset building opportunities in low income and minority communities. We will continue this legacy, and as Dale Owens from a central credit union like to say, we'll be the light. Now, I'd like to introduce my colleague, Neda Arabshahi, Director of the Inclusiv Center for Resiliency and Clean Energy, who's leading our work around climate change, clean energy, and building a network of credit union practitioners in this space. Neda?
Thank you so much, Pablo, and hello to everyone. Thank you for being here today. As Pablo mentioned, I'm Neda Arabshahi, Director of the Inclusiv Center for Resiliency and Clean Energy. We have an incredible session today on credit unions and climate finance, investing in energy justice to build a more equitable financial system. And I'd like to start by introducing our wonderful panel of speakers. You'll be able to read their full bios on our conference website, but I'll just ask for them to go on camera, and I'll ask for us to go to the first, to the slide with the speaker names and bios, please. Wonderful. So Jahi Wise is the Senior Advisor for Climate Policy and Finance at the White House Office of Domestic Climate Policy. Maurice Smith is the Chief Executive Officer at Local Government Federal Credit Union and Civic Federal Credit Union. Doug Sims is the Senior Director for the Resilient Communities Division People and Communities Program at the Natural Resources Defense Council, and Jim Baek is the Executive Director for the Community Investment Guarantee Pool at Locus Impact Investing. Now, before we jump into the panel discussion, I wanted to present a couple slides to provide a little background on our topic. Throughout the session, if you have any questions, please do put them in the Q&A. And thank you again to all of our speakers for being here today. I'll just jump into this background and then we'll shift over to the speakers. So the Inclusiv Center for Resiliency and Clean Energy is working to build and support a network of community lenders, credit unions, community banks, loan funds, other CDFIs that are committed to designing and scaling affordable financing for clean energy solutions. We think that community lenders are very well positioned to operate in this space, and we see the market is growing. President Biden has called for 100% of the nation's electricity to come from clean energy by 2035. And if you could go to the next slide, please. And we've also seen a significant increase in global investment in green. We've seen over 500 billion invested just in 2020 on the clean energy transition. And as you can see, there's been additional investments in renewables and solar. So again, it is a great time for credit unions and other community lenders to get involved in this space. If you could go to the next slide, please. For example, the US solar market currently is growing rapidly. There are over 3 million homes that have solar systems right now, but the market is expected to double by 2023. And there's also been nearly a 60% drop in the cost of solar equipment. And we are seeing the continuation and increases in rebates and incentives throughout the states and at the federal level. If you could go to the next slide, please. So what is the opportunity? We think that credit unions are serving a membership base that often and historically has lacked access to clean energy. We have seen, and credit unions have proven, that they have the deep community relationships and the underwriting experience to lend to those members of the sort of historically excluded from clean energy segment. Typically, these are lower income communities and communities of color. We've also seen that in the credit union space and among other community lenders, early adopters have been able to build a significant green lending track record. There are 265 credit unions and financial cooperatives in Puerto Rico that are currently offering dedicated green loan products. And there are an additional 27 financial institutions, credit unions and cooperativas that are developing new green loan products. Collectively, these institutions represent over 17.3 million members and over $283 billion in assets. We also see that 95% of credit unions and cooperatives do not yet offer green loans. So we are here to provide support and training and guidance for any of those institutions to get involved in this space. If you could go to the next slide, please. I wanted to clarify what a green loan is. So a green loan is a loan that finances projects that reduce household energy burden, greenhouse gas emissions, energy usage, and water usage. And here's a list of a few different types of projects, but there are many, many different types of clean energy or green projects that could fit in this category. And if you could go to the next slide, please. What's very important for us for today's session and also within the credit union movement is thinking about energy burden. Energy burden is the percent of gross household income that's spent on energy costs. The average energy burden across the country for low income households is 3 times higher than for non-low income households. We also see that Black households on average spend 43% more of their income on energy costs than white households, and Hispanic households spend 20% more, and Native American households spend 45% more. So if you could go to the next slide. Again, I mentioned the credit unions that are offering green loan products. 61% of these lenders are CDFIs, low income designated, and or minority depositories. We're also very proud that 25% of them are inclusive members and 21% have participated in our University of New Hampshire Inclusive Solar Lending Training Program. So again, there's a huge opportunity for these lenders to be serving those members of their communities that are experiencing a disproportionate energy burden. If you could go to the next slide, please. So we encourage you to apply for our training program if your financial institution is interested in building your own solar loan program. Here is the link, and it's also in the chat. We're accepting applications right now for our early 22 consumer solar and commercial solar lending programs. Okay, so if we could, yes, and I think we'll go off the slides for now and we'll go back to our wonderful panelists. Thank you again for being here. I'd like to start with Jahi Wise from the White House. So Jahi, if you could please share with us the White House commitment to fighting climate change and supporting an increase in clean energy and energy efficiency solutions, and tell us a bit more about the Justice 40 initiative. And also we'd love to hear how credit unions and other community lenders can help drive this initiative forward.
That's great. And thanks to Neda and thanks to the Inclusive team for convening this really important conversation at this moment. As we said earlier, my name is Jahi Wise. I'm a senior advisor in the White House Office of Domestic Climate Policy, where I serve on Gina McCarthy's team and help to implement the president's vision of a whole of government response to the climate crisis. But before I jump into the actual work, I do want to say for a moment just how important credit unions have actually been in my life. My first bank account was actually with the Washington Telephone Federal Credit Union, a kiddie club account that my grandmother opened for me when I was 5 years old. My first debit card came from a credit union when I was in high school, and we saved for the down payment on our first home in a credit union savings account. So I just appreciate and understand the importance of your institution to help wealth building and financial stability in communities. But back to the business at hand. So as I said, our office has been tasked by the president with implementing a whole of government response to the climate crisis. The president has been clear, the climate crisis is the existential crisis of our time. It's also a huge opportunity for our communities to invest and build back better, to build better, more resilient cities, to address historic inequities in infrastructure investments and clean energy deployment, and to create millions and millions of good paying, family sustaining, unionized jobs. And so, our job my job every day is to work on that. And the president, since day one of this administration, has been leaning into that goal. First day, we rejoined the Paris Agreement, rejoined the international community of countries that are seeking to address the climate crisis. Shortly after, we set our national determined contribution target, goal of cutting our emissions by 50 to 52% over 2005 levels by 2030, an ambitious goal that will put us on a path to a decarbonized grid, as Neda talked about, in 2035, and a decarbonized economy by 2050. We have also helped establish the National Climate Task Force, a whole of government forum that includes dozens of agencies across the federal family who come together to think about pressing climate issues, from resilience to drought to wildfires to clean energy deployment. Has become a nerve center for thinking about these efforts across the government. And we've also established a number of equity-focused initiatives, including the White House Environmental Justice Advisory Council, the Interagency Working Group on Coal and Power Plant Communities and Economic Development, and the Justice 40 Initiative, which Neda talked about, which seeks to direct 40% of the benefits of federal clean energy and climate investment to historically disadvantaged communities. We could talk a bit more about that. The last thing I'll talk about this morning that we're really proud of and really excited about, which is very relevant for this actual moment, is the president's Build Back Better package. The president has been clear, if we're going to tackle the climate crisis, we're going to need to invest. We need to invest in our country. We're going to need to invest in our businesses. We need to invest in our infrastructure and our families. And we've advanced and we're working with our colleagues on the Hill to advance a very ambitious legislative package that would deliver a host of benefits across our society. And this is particularly for climate. This package has a number of really powerful policy proposals to extend tax credits that incentivize clean energy deployment, expand financing tools through things like a clean energy accelerator, which Doug will probably tell you a bit more about, and to establish really ambitious state and local climate policies. And to Neda's second question, I think this is where credit unions have a really powerful role to play. If we're going to tackle the climate crisis, it's not just building, wind farms far away places and routing the power to the grid. It's going to be helping families buy electric vehicles. It's going to be helping purchase and finance energy efficient appliances and home heating systems. It's going to be helping a business make their building more energy efficient, cutting operating costs. And credit unions, with your history of relationship-based lending, your deep networks in these communities, you are the deployment mechanism for financing these technologies, which also often have an upfront cost, but over time pay themselves back over and over again. So we'll really be looking to you all. I saw the numbers that Neda put up before. I see that as a huge opportunity for growth in this space. We're gonna support from the policy perspective and provide all the supports we can to make it possible for families to adopt these technologies. But at the end of the day, we're going to need partners on the ground who are actually going to do the work of making sure folks can have the financing tools they need to adopt. So I'll pause there so we can continue with the conversation, but I'm really excited about all the potential here and to work with each and every one of your institutions to advance the president's agenda. Thank you.
Thank you so much, Jahi. And I saw in the chat, someone said, I can actually feel my blood pressure going down hearing that the executive branch is taking climate change as seriously as it is. And I totally agree. It is very inspiring. So thank you so much for being here and for sharing that with us. And you perfectly queued up Maurice. Maurice, if you could please speak to how your community is impacted by climate change, in particular, how climate change and disproportionate energy burden impact the most vulnerable members of your community. And if you could share with us how, as a credit union leader, you're exploring ways for your credit unions to invest in and get involved in climate-friendly financing and climate solutions.
Well, good morning, Neda, and thank you for the introduction and for the opportunity to be here on this panel. I'm actually delighted to be here for the Inclusive Virtual 2021 Conference. And I thank Kathy Mann for the opportunity to share in this dialogue about energy justice. Now, Inclusive is skilled at identifying important national and global matters. We all know that. But the more I learn about Inclusive's body of work, the more impressed I am with its team and its workmanship. So this topic is another reason why when Inclusive has something to say, the rest of us in the audience should lean in to learn more about it. So I'm serving on this panel in a dual role. One is to give some insight from our credit union and perhaps from my perspective, but I'm also here to be a student too. So as Jahi was mentioning in his opening remarks and what's going to be said later, I'm taking notes here for myself so I can learn how to be better in this role and how our credit union can serve our members better. So I want to talk about the credit union's role in energy justice. And at first I want to mention, this feels like a natural conversation for credit unions. I don't need to lecture my credit union brothers and sisters about the purpose of credit unions and our missions to serve all our communities. We were created out of a sense of fighting injustices toward consumers. The issue of energy justice is already on your doorsteps. The question for us as credit unions is, what are we going to do about it? Are we going to sit by and miss this opportunity to be relevant today, or are we going to act and do something about it? So from my perspective, Neda, I have this confession I need to make to you and the audience here. And I have this fantasy. It's actually more like an obsession that credit unions should be on the front line of eradicating poverty in this country and in this world. Now, don't laugh. Because we've often heard these terms like war on poverty, but for credit unions and for me, this feels more like a crusade. And I'm talking about not just your regular run-of-the-mill poverty. I'm talking about the kind of poverty that's stubborn, that's intergenerational, the kind of poverty that robs people of their wealth, opportunities, and also of their dignity. The kind of poverty that's dangerous for communities, for their health and welfare, not just their checking account or their savings account. So you all here who are part of credit unions, who are part of this audience, you did not choose this career opportunity for yourselves because someone sold you on the idea that you should be satisfied with peddling financial products to the public or to your membership. You decided to work for credit unions because you wanted to make a difference. But on this journey, you know, I've learned that this notion of poverty has no one face to it, that the social determinants of poverty vary, and how we as members of our community or our households, how we find ourselves in the state that we're in today can vary from different courses. There's no silver bullet or no one size fits all. But the one thing that we have learned here in our understanding of poverty at our credit union is that one way to combat poverty is addressing the friction points, the kind of things that separate a household from where they want to be and keep them stubbornly set in the place where they are today. Energy burden is one of the biggest barriers to creating the kind of life that our members want to have. Lower income households face a disproportionately higher energy burden than everybody else. So if you're listening to this, take out a pen and paper. I have some statistics I want to share with you. You heard some earlier from Neda. I want to give you a North Carolina perspective on it. You see, North Carolina families who devote a higher percentage of their income towards paying utility bills have to make trade-offs. Trade-offs on, do they feed their children? Do they provide, medicine for their home? How about childcare? They have to make these very important and sometimes dangerous trade-offs just to maintain the utilities. But in North Carolina, the average energy burden is 3%. But becomes an issue, we feel, when it rises above 6%. There are 100 counties in North Carolina, and 27 counties have households that spend an average of 6% on energy. Now, that's 25% of our counties already at the level that's created what we believe is an issue. Low-income households pay as much as 23% of their income for energy. That is the price for rent or mortgages, and it's going out the door for utility expenses. In North Carolina, the median energy burden for a Black household is 45% higher than non-Hispanic white households. Now, if you are paying attention to those numbers, you realize we have a problem. But as credit unions, we don't focus just on the problems. We focus on what is the solution. And I believe you are part of that solution. So let your imagination run wild for just a moment. What do you believe that your members could do if they had a 20% raise? Their disposable income went up by 20%. Because they were not spending that money on utility bills, they were spending that money on things that would advance their household, advance their family members, advance their community. So let that notion rest just for a moment. Now let's focus a little bit on this notion of energy justice. You see, credit unions, we don't live in a vacuum. We are part of the community like everybody else. And this has an impact on us as well as every other institution, every other community. We think about justice, the very basic notion of it is that justice demands equality for all. But the burden of climate change and utility consumerism does not fall equally on all communities. So what does this mean? Unless you are a member of an electric co-op, you don't have much of a voice in how utilities are operated. As a consumer, I do have a voice on what happens behind the meter. So let me explain that term. Because I've learned from my electric co-op brothers and sisters about this barrier that they think about. There's something that happens in front of the meter and there's things that happen behind the meter. So in front of the meter is the creation of energy, the transmission of that energy, and the delivery of that energy to your home. But then it hits that meter that's likely sitting on the side of your house or near your apartment unit. And then when it goes past that meter, now it is behind the meter. As a consumer, I should be empowered to control my utility expenses for the things that happen behind the meter. And so our role as credit unions is finding ways to give members the resources they need to control what happens behind the meter. Now, climate change is happening here in North Carolina. We're seeing larger and more damaging storms. I was talking to a mayor recently of one of our seaside communities, and he mentioned to me that they're finding salt water 30 miles upriver and upstream from the ocean. Where normally you would only find fresh water there. This is changing the ecosystem here in North Carolina. Plants and animals are affected by this, drinking water, farming soils. And this climate episode hurts the low-income communities the most because they lack the resilience to be able to adjust themselves to a new reality or have some impact on reversing what's occurring thus far. Finally, it takes resources to be resilient and for individuals to prepare themselves for how the world is changing and to build wealth, to be able to buttress themselves against those things that friction that comes against households to create the kind of injustices financially that we credit unions were designed to fight. So I'm looking forward to the continuation of this conversation on this panel, learning from my colleagues here on what we can do for our credit union. I'm hoping that what we say to you today is going to light a fire under you and your credit union to do something meaningful about serving your membership and helping them live the best lives possible. So Neda, I'll get off my soapbox for the moment.
Thank you so much, Maurice. That was amazing. We really appreciate hearing your perspective and learning more about the specific examples that you're experiencing in your community. I think it's really helpful to put some very, very direct examples behind some of these stats. And we'll shift over to Doug. So Doug, working at an NGO, working at the Natural Resources Defense Council, we'd love to learn more about how you're driving agenda at the policy level around green investments, how you're helping to drive the green economy through capital flows, and how you've become aware of community lenders like Maurice's credit unions and how they could make a difference in this space.
Thanks, Neda. Thanks for convening this great conference, an incredible panel. I was going to thank you even more profusely, except then you put me between Maurice and Jahi. So I kind of am feeling a little bit mixed about that. Thank you, being really heartfelt. But thank you, Maurice and Jahi, for amazing launch to this discussion. So as you mentioned, NRDC, Natural Resources Defense Council, is my company or my organization. We're a 501c3. We've been around since 1970, and we actually were formed as the first law firm for the environment originally, on the model of the NAAC Legal Defense Fund. So there was no, at that point in time, there was really no specific laws to protect the environment that were around. And NRDC helped bring cases under common law and helped create the environmental legislation, Clean Air Act, Clean Water Act, basics, which allowed some basic protections to be put upon the activities of essentially commercial activity and public activity to protect communities. So since that time, we've grown to about 700 advocates. Most of us are not, I am a lawyer, I'm not a litigator. Most of us are actually advocates and experts and scientists of various kinds. We operate all around the country and also in India and China. And so in our main mechanism, we have a lot of tools, but policy is a big mechanism that we work with at the local, at the state, at the federal, at the global level. So we work on things like the Paris Agreement all the way down to local city ordinances on everything from building code standards, to local taxes, property taxes, really everything that can impact the environment. Right now, our main focus is partnering with the White House, others in Congress, and communities around the country in advancing the Build Back Better package, which is an amazing opportunity, lifetime opportunities to invest in communities and in climate. And so we're trying to make sure that the package includes priorities that center communities of color in the benefits and the investments, and that also makes sure that the infrastructure investments we are making aren't replicating past injustices, but are actually growing them. And we also try to make sure that infrastructure is defined broadly to include housing, to include micromobility, to include schools, to include hospitals. That's all infrastructure. And that's something which we're really happy to see the administration embrace as a concept, along with our colleagues in Congress as a theme. So on the side of capital flows, most of my work has been around increasing capital flows to green. So I worked on a lot of public finance concepts like green banks, which essentially began as state level banks that could fill the gap where the private sector wasn't able to invest in things like solar, things like energy efficiency. Also trying to push for standards in the capital markets like green bonds. So you could actually enter the bond market and find a source of capital which is used for green. We work on also making sure the financial regulation is encouraging low carbon financing. And in that work, we've increasingly been focused on inclusivity in finance for a number of reasons. And also more recently, what we're calling the just transition, which Jahi mentioned, which is helping people cope with the transition to clean energy, people who are dependent on fossil fuel economy. So we try to make sure there's appropriate financial products, appropriate risk mitigation products, availability of credit products to help all levels of our society make that transition and deal with the implications for justice in that area. So I think if you look at the how NRDC thinks about the policy level of this work and how we can work with credit union-based communities, we've made a major shift in how we think about the world over the past several years. And we've actually undergone a strategic planning around our climate strategy, which centers for the first time equity with climate. In fact, it centers equity, it centers racial justice, it centers sort of democracy along with climate, because we really can't solve the climate crisis without dealing with equity, without dealing with democracy. And so we're an environmental organization. We're not specialists in democracy, and we're learning from our partners on equity. We've made the commitment to do that, and that really affects on how we approach what we work on, and what we work on. So we always worked on buildings, because buildings are a major source of emissions. But now we work especially on housing, on affordable housing. And so our strategy on building decarbonization, which means like removing all of the carbon producing technologies in housing, is equitable housing decarbonization. And so making sure that there's the policies in place and also the financing in place to ensure that. Similarly, it makes us focus on affordability and not just emissions reductions. It helps us focus on not just electric vehicles, but electric transit, micromobility, shared vehicles, and also helps us focus on how communities are, whether or not they're being invested in properly to create wealth. That's how it influences how we approach. And I think the credit unions I've been working in the financial sector all of my career. I started out really working in the developing world internationally, places like Africa, Latin America, and Asia. And I thought that was my introduction to finance. But in the US, I really started from the green side. But as we've worked over the years, it's become more and more clear that we need to really not be siloed in green and inclusive. It has to be green and inclusive. There's no real division there. So groups working. So what we're finding is that some of these green specialist lenders, I'm on the board of one of these green specialist lenders called Inclusive Prosperity Capital, which is a nonprofit finance company, which Neda works with. Really has been, was the first sort of green lender formed to focus on disadvantaged communities. And so the green needs to understand how to lend in communities that are disadvantaged, and the specialists like credit unions and loan funds and NDIs and others need to learn from the green lenders, because there is a specialization in green. And so what we're trying to do is really promote and create platforms where we can bring, we need so much financing and so much investment that we need to bring everyone we can to the table and have all the networks and channels we can. And so we're trying to help create partnerships between your world, Neda and Maurice, and the world of green lenders. And also, ultimately, there's a whole bunch of so-called mainstream capital providers who say they want to invest in ESG, but they really aren't doing a great job. One thing we can do is create platforms which give them products which make it investable. Then there's really no excuse. So we want to work with the public sector, the private sector to do that. So maybe I'll leave it there for now, Neda, and we can move on. Does that make sense?
Yeah, that's wonderful. Thank you so much, Doug. And I think, oh, and I see we have Jim. So Doug, thank you for connecting the government to the credit unions, to the nonprofit sector. And now we're going to bring it over to Jim Baek. Jim, I know that you've worked in the banking sector historically, and right now you're at the Community Investment Guarantee Pool. We'd love to hear, how does CIGP enable impact-aligned guarantors to unlock their balance sheets by pooling resources and sharing risk to help catalyze greater investment, especially in structurally underserved or excluded communities? And what does that mean for credit unions? How can credit unions get involved with CIGP?
Sorry, I was on mute there. Thank you, Neda. I'm so excited to be here. Thank you to Inclusiv for putting this together and hosting these really important conversations. So as you said, I am the executive director for the Community Investment Guarantee Pool, which is a startup, and it's a program managed by another startup called Locus Impact Investing. Locus is a nonprofit consultancy and mission-driven advisory firm that works with foundations and other impact investors to educate, develop strategies around impact investing, source structure diligence, and asset manage those opportunities in portfolios. So CIGP is very much kind of right up the alley and then scope for what Locus is focused on. I think I'll focus on a couple of my responses to your two questions around kind of how does it unlock additional resources for climate justice, and what does it mean for us and also for credit unions in terms of the opportunity here. So I'm
sorry, Jim, do you want us to put up the slides? I apologize.
Oh, yeah, that would be great. Thank you. Okay. You could start, I think you could maybe skip to 15. You could go to the next one. Yep, that's great. So the CIGP launched in December 2019 with about a dozen investors. It was an effort to pioneer the strategy of aggregating and deploying unfunded philanthropic guarantees to catalyze more capital into community development for affordable housing, small business, and climate change. And in doing so, to also challenge some of the inequities, particularly racial inequities that have been pervasive in the financial markets, even in the community development financial sector. If you could, and so you see here some of our members and investors. If you could skip to the next one. Thank you. So in terms of the value proposition for our investors and for other mission-aligned investors that are perhaps interested in climate change and other community development areas. So with CIGP, we're trying to affect change at a few different levels. But one of our principal goals is to increase and accelerate the flow of capital into community development, particularly community development that finance that's aligned towards racial equity, greater equity and inclusion in general in affordable housing, small business, and climate change. And one way that we seek to do this, one kind of our particular strategy for supporting this overall goal is to encourage philanthropic investors to up the share of their balance sheet that's deployed proactively for missions. So not necessarily in ESG screen strategies, but proactively in impact assets that are pushing for more inclusion around affordable housing, small business, climate change. The background for foundations in the US is that generally they have a 5% payout requirement, which is that 5% of their balance sheet has to go out to support their mission, typically through grants. What that means is that 95% of their assets are may not necessarily be deployed towards mission. And in fact, some of that is likely in the public equities, fixed income, and alternative markets through various kind of strategies through their CIO's office. And through CIGP, what we're saying is you can keep your CIO strategies in place, take advantage of the strong equities market, but why not take a sliver of your balance sheet of your endowment and support community development finance organizations that are working in alignment with your philanthropic mission. And the value proposition, you tried to kind of capture that on this slide, for investors also includes the fact that we've got some economies of scale in terms of doing this together that allows for more robust risk management. So if there is a guarantee call that's communicated early on, typically foundations are able to take those guarantee calls as a grant or a PRI. And in terms of other kind of collective opportunities here, I think the big thing for us is to learn along the way. Foundations have been doing, and other parties, including governmental agencies, have been doing government guarantees for a long time. There's nothing new about that, but I think what we're saying here is there's an opportunity to increase kind of the accessibility as well as the efficiency of offering these by doing this in a kind of syndicated or collective manner. If you could advance maybe a couple slides, Neda. Yeah, one more. Yeah, this is fine. So as I said, we've been in operation since just before the pandemic. We have about 40 million in guaranteed capital, and we've deployed about 16 million in guarantees through 7 guarantees. Here you see some of the high level kind of parameters of the program. The terms are, we are a 15-year fund at this point. That's something that I think we'll be looking at in the coming year or two regarding extending that. We know that for a lot of climate change finance opportunities, a longer term is important in terms of that transaction. We're kind of learning that as we go along. Small business, affordable housing tends to have kind of a shorter tenor. This exercise is meant to be this pilot is meant to be a financially sustainable model. And so there is pricing for the guarantee. It's based on the amount of the guarantee, not the overall transaction that it's supporting. It's 1% to 2% currently. And in terms of the types of guarantees we offer, we have what I would say are loan by loan or kind of asset by asset, kind of a pool or portfolio level guarantee, and then a business level or enterprise level guarantee. And I can get into, if there are any more questions on any of that, I can get into that. But we can support credit risk, liquidity risk, various types of risks that might be the kind of in focus for the beneficiary. So why credit unions, and why am I excited to be here to address you guys? I think one, it's when we talk about racial equity, when we talk about income inclusion and opportunity, I think there's just not another kind of channel to those communities that really comes close to the credit union, the community development credit union sector, in terms of having an engagement, a governance, kind of accountability to those communities. And so I think that's something. One thing that I didn't share, and it was on one of the earlier slides, is that of the 7 guarantees that we've done, 5 have been in housing, 2 have been in small business. So we haven't done one on climate change, and we very much want to do that. And I think the fact that we're looking at the intersection of justice and climate change, I think makes us focus on credit unions as that unique channel, as kind of the lever point that can provide access to those communities towards the benefits of green financing. And I'm probably running up against time here, so I'll just go toward, why don't maybe go to the last slide, Neda? So we have an RFP out right now requesting use case ideas around climate change, racial equity, and the use of a guarantee. That's the good news. The bad news is it's due the short statement of intent, which can be literally an email saying, hey, I have an idea around, solar installations amongst my membership, and it's due tomorrow. If you have any questions around RFP or any other questions around CIGP, you see some of the contact info there. I think, the last thing I would say is that the opportunity that, and I think Maurice, just kind of nailed it, and I'm not going to do it justice at all, but I think you guys are in a unique position to really, just look at kind of where the penetration is for green financing within the credit union market, see what the need is that we as a society need to get to, and what you can deliver on that front, and the opportunity is huge. And I think we want to, as a provider of a very bespoke, flexible guarantee product that we can work with you around, I think we want to be able to support all of the best ideas. Now, granted, that's somewhat constrained by the amount of capital we have access to, and so it's a 2-part exercise for us to raise additional capital. But I think that's really the exciting opportunity set right now.
Wonderful, thank you so much. And I think we'll go off the slides for a moment. Thank you to all our speakers. I think folks have received the message. We think you should be involved in green lending. There's support from the White House. There's support from other credit unions. There's support from NGOs like NRDC. There's support in terms of loan guarantees from the Community Investment Guarantee Pool. I did want to take a moment. Jahi does need to drop off at this time. Jahi, did you want to mention any closing remarks before you have to jump off?
Yeah, I would just say in closing, one, this has been a fantastic conversation, and I'm really excited about continuing to work with all of you to kind of advance this. This is the issue. This is the issue of our time, climate, and whether we meet the crisis and seize the opportunities that it presents. I'll underscore that the President's Build Back Better legislative package just includes a number of different powerful policy tools that will support credit union entry into clean energy lending, including the Clean Energy Accelerator, which is a new entity that will be formed to support state, local, nonprofit financing institutions who are entering that space. And Doug is one of the fathers of that policy idea, so I'll leave it to him to talk more about it. But I just wanted to underscore that this is where we see the country going, and we want to walk arm in arm with all of you into the future here. So thanks again for the invitation, and feel free to reach out. Look forward to seeing you out there. Take care.
Thank you so much, Jahi. Have a great day. Thanks for your time. Wonderful. Thank you. We're going to do a few more questions with the panelists. Also, if folks in the audience have questions, please do feel free to put them in the Q&A. And we're going to start by going down the line and just asking again, in case anyone has anything to add, why should credit unions be in this space? What do they bring to the table? And how are they uniquely poised to offer financial solutions for climate change. And we'll start with Maurice.
Thank you, Neda. This has been invigorating. And so I would actually challenge my credit union colleagues to come up with an argument why you should not be in this space. It's low-hanging fruit to make the argument that you should be here. I'd love to hear a debate why you shouldn't be here. Let's think back to 1934, Federal Credit Union Act, codified in an act from Congress, is this notion that we credit unions help our members with loans for what is called, and I quote, provident purposes. These are productive loans that we do for our consumers. We just aren't peddling another financial services. We are offering products to help people live better lives. Mm-hmm. So I don't know much more that you can do that's going to help your members build wealth, to reduce the friction that they have in their own budgets. It's going to be healthier for them, good for their community and the whole world. I don't know what else, we would need to do to argue that this is something we ought to be doing. Credit unions, we understand our members. We know where they are. We know what their needs are. We are governed by our members. We are part of the membership itself. And that kind of intimate knowledge of the people that we serve, the relationships that we have and the commitment we have to them, that makes it easy for us to be a part of this work. But I think it also compels us as credit unions to be a part of this work. So I think we are perfectly aligned for this. And so for those of you who want a good argument, call me and tell me why you don't want to do this, because I don't know there's any excuses that we have for not being involved.
I absolutely agree. Thank you for that. And Doug, I'll ask you the same question. What do you think credit unions bring to the table? Why do you think they should be involved in this space?
Okay, I'm going to answer this question, but also since I got Jahi gave me instructions to talk about things further, I also want to do that briefly. So I think the huge opportunity. That's another reason. I mean, it needs to happen. It's aligned with the mission, but it's also a huge opportunity. The trillions we need to mobilize on an annual basis to really get where we need to go can't be underestimated. And this is going to happen one way or another, and it needs to happen with your communities benefiting. And there's no one else positioned to deliver these services to these communities. When my first introduction really was through CDFIs that were loan funds, not credit unions. And I was really amazed at what they were doing, but also saw that they really weren't 5 years ago, they really weren't technically up to speed, and they were very kind of intimidated by the how to do it. Now you have groups like Inclusiv offering training programs. You have the costs really declining. You have a long track record of performing loans. You have new kinds of commercial vehicles like community solar, which didn't exist, which allows you to get to scale. You have all these great programs in many states, not all, unfortunately, that allow some subsidies. So there's a lot of reasons why, and I think the most important part that's changed now as well is that there are emerging platforms that have been tested that allow you to do what you do best, which is focus on lending and community partnerships, and partnering with technical lenders who have designed products and servicers who design products that can work for you. So I know that Neda is working with, Inclusiv is working with the board that I'm on, Inclusive Prosperity Capital, Inclusive with an E, on developing what's called a Smart E-loan platform, which really allows a credit union to get access to standardized product terms, contractor vetting and oversight, understanding what measures can be financed. So it's becoming easy, it's becoming very plug and play. So you can do it on a platform and sort of do it quickly and easily and learn by doing. So now's really the time for you to get involved. From the point of view of an environmental organization, what really excites me about credit unions in the space is their deep community reach, as Maurice was saying, the financial stability of these regulated entities, which are really strong financially. The fact that they get money out the door very quickly, generally speaking, the way that the community reacted to COVID was quite amazing, how you were able to scale up in a counter-cyclical way. And the possibility for leverage, the 10-to-1 leverage. So just go back to what Jahi was talking about. There's a proposal to create essentially what would amount to a federal like channel for long-term, low-cost capital for climate. So we're talking 30-year money, equity-like money, or even equity itself at the federal cost of borrowing or just above that. An incredible opportunity. So what we've been working on to ensure is that legislation really allows for credit unions, MDIs, CDFIs of all kinds to have access to that capital. It also provides technical assistance funding so that programs like Inclusives can be scaled up to train the generation of bankers to really do the underwriting. So the last thing I'll say is that, you know, this Justice 40 obligation, which Jahi mentioned, is really critical. And it's very easy for people to say they're doing things that are reaching these communities. It's very easy for people to gloss things over on annual reports, you know, commercial lenders. But what we're fighting for is real standards and real delivery channels that can deliver to these communities. And your community is really the only boots on the ground to deliver these Justice 40 benefits to communities. So I really encourage you to get involved in this space. It's no better time to do it. It's easy to do it. It's safe to do it, and you're helping solve the crises of our time, which are inequality and climate change.
Absolutely. Thank you so much, Doug. And Jim, I will ask you the same question. Why should credit unions be in this space? What do they bring to the table? And why are they uniquely poised to offer climate finance?
So I'll say community knowledge and customer acquisition are the two reasons why community development credit unions should absolutely be in the space, why they're critical to kind of this societal challenge that we have, and the opportunity for them. So just in terms of community knowledge, I think that the communities that you are serving that comprise your membership or potential membership are the ones that have been disproportionately affected by the environmental consequences, including extreme weather. They're the ones that have not necessarily been able to take advantage of the savings, the household savings related to green financing. And I think the fact that you know this community, you know how to talk to them about financial services, about how to serve, you know, not just their credit needs, but some of their other banking and household financial services needs, really kind of positions you best to kind of bring them that access and help them participate in the transition that's going to happen. I think the other piece of this, other than community knowledge and customer acquisition, is that there are more and more opportunities that kind of are providing hopefully some wind at your back. You have learning opportunities like Inclusive's workshops. There are other ones as well. There's the ESA program that I think Doug was referencing that's going to create a huge opportunity to actually kind of grow your loan books around, hopefully around this type of thing. And then there are things like CIGP and impact investors who are willing to kind of get their hands dirty in terms of understanding what's the product you're trying to launch that you think can better serve your community, and how can we kind of work with you to support that?
Absolutely. Thank you so much, Jim. And I did post again in the chat the application link for the guarantee pool, which, as Jim mentioned, the statement of intent can be submitted tomorrow. So if folks are interested, we definitely encourage you to not miss out on that opportunity. We do have a few questions and just a couple minutes left in our session. So I'll start with the top, but if we don't get to your question, we will follow up later via email. What are the biggest barriers to credit unions getting involved in green lending, and what is the key to getting green products off the ground? I think we'll put that question to Maurice.
All right, thank you, Neda. I think the biggest barrier for credit unions to get involved in green lending is we think it is super complicated, sophisticated, and difficult. The barriers to entry are not difficult. So if someone want to get solar panels, or they want to make improvements in their home to make it more energy efficient, they want to purchase a green automobile, electric automobile, the kind of things that's going to improve their economic situation, you already have the products on the books of your credit union today. It's called a home equity loan, it's called an auto loan, it's called a credit card, it's called a personal loan, unsecured loan. You already make these kind of products today. The only difference is it's the purpose of the loan. So when someone fills out an application, I want this amount of money, and then usually that's a line for the purpose of the loan. So it doesn't have to be difficult. It doesn't require any going to your core processing system and recoding your loans. Take the loan product that you already have, be intentional about how you reach out to the community, and you already have the data analytics to understand who needs these the most. So if a member goes to your credit union, they want to borrow money, you look at their debt to income ratio, you say, that's a really good debt to income ratio, but they're still struggling. Money is being leaked out of their budget somewhere. Likely it is in an energy burden. And so there's an opportunity for your credit union to step up and say, we can take a product that we already have, and we can now manage that product to serve your particular need by changing the purpose and using it for your needs in this area. And that can be the solution for a household. So recap, biggest barrier, we think it's overly complicated. It doesn't have to be complicated. We can make this as simple as the membership needs it to be.
Absolutely. Thank you so much for that. I think with just 1 minute left, I will say thank you so much to our incredible group of panelists. This has been such an inspiring and interesting conversation, and we greatly appreciate it. Thank you for your time, and thank you for sharing all your passion for this work. I also want to thank everyone in the audience for attending. And I just want to mention that at 11:30, we hope you'll join us again for our breakout sessions. We have a session on the CDFI Fund and You, a session on inclusive mortgage, turn denials into approvals, and a session on lending tech, innovation by necessity. And we also hope you'll apply to our solar lending training program. I'm putting that again in the chat. And I see Angela is here. Thank you again so much, Angela, for starting off our session and for that wonderful moment of silence. It was very, very important and inspiring to have that time at the beginning of the session.
Thank you, Neda, and thank you to the general session speakers and moderators, Angela Morrison, Todd Harper, Jim Baek, Douglas Sims, Maurice Smith, Jahi Wise, and of course, Inclusiv's Pablo De Filippi and Neda Arabshahi. A reminder that Kathy Mann's fireside chat with Robert Smith from this morning and their conversation on credit unions as ecosystem hubs may be found on the conference website. It has its own menu tab and it's next to speaker bio, so you should be able to find it there. This morning, as Neda mentioned, we'll have 3 engaging topics in breakout sessions at 11:30. If you don't happen to catch one, we'll be tweeting big ideas and sharing thoughts through the hashtag CDCUCon 2021. And the recordings of all sessions will be online on YouTube at Inclusive CU Network by October 11th. So we'll send out an announcement about that. Please visit exhibitor booths as well on the break. Our exhibitors are leaders in financial services, and they're sharing their work in advancing financial inclusion and racial equity. So check that out, please. And don't forget to return after the next session at 1 p.m. After the lunch break to continue the rest of our exciting second day when with Inclusiv, C-Note, Comcast, and Prudential Financial, we will discuss how socially responsible investors advance equality. Thank you, and see you all at 11:30.